And we will see who's here in the room with us. If you are joining us just now, and you must be because I just opened up the room. My name is Jay Frost, and I'm the host of the Philanthropy Mastermind series brought to you by DonorSearch. I'm emphasizing their name because I'm very grateful to them for providing a platform where we can have these discussions. And we've been having them since 2016. So if you want to know anything about anything involving fundraising or philanthropy, I hope you'll keep coming back if you're new to this. And if you've been here before, thanks for returning. DonorSearch, we won't be talking about them today unless our guest decides to mention them for some reason, but that doesn't mean we aren't interested in introducing them to you. So I would encourage you to take a look at their site later today. It's at donorsearch.net, where not only will you find recordings of all the sessions we do, including this one today, but you'll also be able to sign up for future programs. And we've done over 600 since we began. And so I'm sure you'll enjoy some of that past content, especially if you're collecting CFRE credits towards your CFRE designation. But at any rate, today, of course, we're going to be talking at length about a variety of topics with our guest, and I'll be introducing her to you in a moment. She's being quite patient with me while I rattle on here. But I want to make sure that if you're new to this platform or haven't been in a Zoom meeting for a while, how that's possible, I don't know. But if that's true, there are two things you can use that are at the bottom of your screen. And I'm not talking here about turning yourself into a cat. We were discussing that moments ago, but rather just making sure you can talk with us because we cannot see or hear you since this is a Zoom webinar and not a Zoom meeting. But we do want to hear from you, and we particularly want your questions and your comments throughout today. And we'll start right now with the chat feature. So if, as I'm beginning to do the introduction, if you would go ahead and find chat at the bottom of your screen and just let us know that you're here, that would be especially helpful for our guest in today's presentation. So please just go to chat, say hello, maybe where you're from, the organization name, whatever you feel like including. We definitely want to know you're in the room. That's under chat. If for some reason chat isn't working for you today, I know Zoom had an issue with that the other day, feel free to use Q&A. Q&A is also at the bottom of your screen, and that's exactly where we want to make sure we store up all your questions to make those a part of the conversation today. But use either of those things. We'll be monitoring throughout. And with that, I want to jump into the topic, which is talking about nonprofit investing, endowment trends, stock giving, crypto giving, who knows, maybe even some other really interesting little pathways on the world of finance with our guest, Karen Houghton, who is the CEO and founder of Infinite Giving. If you don't know that firm, you definitely need to look them up today. We'll make sure to include that link in the chat and in the Q&A. She is an award-winning, or rather her firm is an award-winning automated investment platform, bringing better investing experience to nonprofits. And that's nonprofits of lots of different sizes. So if you do not have an endowment, you think it's not for you, stick around because you're going to learn that it's within your reach. Karen herself has a complete 360 view of this sector and all the questions that are going to come up from you that we tackle. She's served as an executive director of organizations, a board member, venture capitalist, a technology entrepreneur, an investment advisor. She knows this stuff backwards and forwards from the finance perspective, but also living in our shoes. So with that, Karen, thank you so much for being here and talking with us today. We really appreciate you.
Thanks, Jay, and thanks to everyone for joining us today.
And it does look like we're not getting any comments in the chat, so I'll bet you anything. It's only, yep, chat is disabled. I guarantee you, I did not disable it. So please do use the Q&A. We'll pay attention throughout. We're not trying to silence you. We really do want to hear from you. Use Q&A. Now, Karen, there's a lot we can talk about, and you set the stage by suggesting these particular things, but we can go broad. But let's start maybe even as broadly as possible. What's one of the most common financial concerns that you're running into that nonprofits have now?
Well, Jay, I think unless you've been under a rock, everyone is probably feeling a lot of stress in the volatility in the markets and the rise of inflation. So we get a lot of common financial concerns around the general overall stability and health of the economy. And as you guys probably know, in June, inflation hit 9.1%. And the Fed should announce soon that they're rising interest rates again to continue to combat this. It is not just the US, it is a global inflation rate. And then for nonprofits, that kind of goes into, yes, like for us as staff, as board, as donors, we're feeling the pinch on rising prices. But then it's also the question of, will there be a recession? And are we in a recession? And what does this mean for me? What could it mean? And what do we do to prepare for it? So I always like to start out with the question of, are we in a recession? You can Google that. You're going to get a bunch of different answers. You see a lot of doomsday kind of, headlines where we're talking about the reality is technically we're not in a recession, but we are at an increasing risk. And that's why you're hearing about it a lot. And what I always think is really important to share with folks is to remind you that every recession has been caused by something slightly different. And this one in particular is even more complex because we're coming off a pandemic. We're in a pandemic, wherever we fall in that, right? We have the COVID-19 and all the other succession of the virus. We have Russia, we've got supply chain issues. So it's very complex. And when there's a lot of financial conversations, I'm oversimplifying this, but I think you should know is that, are we in a recession? No, not yet, but we likely could be, and we'll find out probably in the next few months, right? But the good news is that US unemployment is low, job growth is still very robust, and households, like in an aggregate, still have lots of money in savings and relatively little debt. So it is not all bad news. And especially I share that last little bit because when you look at all that data and you read all of that, that's the bit that's good news for nonprofits, because that's meaning generally unemployment is low, right? So people are still having income, job growth is robust. And again, households have lots of money in savings and relatively little debt. So that's good news for you. So,
yeah. And I know there's a lot to
yeah.
that we could, not you and I could debate, but that people are debating right now about the way to interpret these figures. One of the things that's commonly said is that we're at historical lows for unemployment, but then it's countered by some people who don't seem to like that characterization that yes, but a lot of people have opted out of the market for the workplace market. So some of those things that are happening, how are they influencing your discussions with nonprofits about whether or not this is a good time or a bad time to undertake maybe some new thinking about how to save money, whether that's in the form of some kind of reserve or better yet, an endowment?
Absolutely. Great question. Generally, what I say is that it doesn't really matter if we like it or don't like it, or agree with it or don't disagree with it. We can't change it, right? So all of these things are beyond our control, right? And so I challenge folks that now is the time. If you cannot think creatively in this time, then you're going to have a hard time ever doing that. So it's not just, hey, we're going to put our heads in the sand and ignore it and do what we've done every single day. Instead, it's like, all right, we see what's coming. There's a lot of discussion about it. There's good news, there's bad news, there's hard times. How do we think about this creatively, and how do we explore our options and make sure that we're making decisions based on data and not emotion? And that's the best advice I can always give to boards and your personal finances, nonprofits, is looking at that data and then thinking cool-headedly about what this means. So preparing for a recession, all of these are things that your nonprofit should be doing anyway. So I always like to say, like, recession or not, good news, bad news, things you should always be doing is focusing on fully funding your reserves. So pre-COVID, right, we were hearing, 3 to 6 months, that's your really healthy reserves. That's what you should do. I like to tell people that post-COVID, what we're hearing is 6 to 12 months of operational reserves in the bank. So reserves, right, should be your savings account. Some of you listening might be like, wow, that's a dream. I'm in a scarcity mindset and month to month. Every organization starts there, right? So all you have to do is think about, how do we get our 1 month of reserves? How do we build that to 2? If you're at that 3 to 6 month mark, I would challenge you and say, hey, 6 to 12 months of operational reserves is now pretty much moving to standard practice. So make sure that you have that. Essentially, it's like a savings, right? It's the long term that you're putting aside in case something happens, in case a grant comes through, a donor that gives every year can't give. Just like you would personally, you have your emergency savings for your household, right? Maybe you don't have it, you go and get your first $1,000, right? And then you can grow. So make sure you're fully funding your reserves. Reducing expenses, that's a big one, right? Nonprofits should do that anyway. If you and your organization or a board has not looked at reducing expenses, and usually I encourage people to do that, especially with investment and banking and management fees, that's a great opportunity where you're just reducing the spend, but you're not actually changing what you're doing. Pay down debt if you can. So that's a good rule of thumb anyway, but paying down debt, right? There's smart debt, and then there's other debt that's less healthy. So pay down debt. And then one of the last two is to stay invested if you are invested. So again, we're going back to don't make emotional decisions with finances. You need to make data-driven decisions and trust the long-term strategies that you have in place. So stay invested, just like we saw in 2020. If anyone panicked and they left the market, 6 months later, if they stayed in the market, they would have made a ton of money. So it's not always that simple. And again, we're going kind of high level and oversimplification a little bit, but you stay invested. And if you can buy the dip, we're in a dip right now. So if you are thinking about getting in the market for the first time, or you want to put additional money in the market, or you want to ask for an endowment, now is potentially a really good time to do that. And then the last one I always say is support your team. So often when you have high inflation or you're preparing for a recession and you're just kind of going through that financial, it doesn't have to be panic driven, right? But just like, hey, what are some smart things that we could do and revisit? Often the solution is we have to go raise more money. Let's go to the development team, raise more money. You have to raise more money, but we're not giving them additional tools or support or different ways, or again, creative thinking to actually go raise more money. And so we're really, really passionate at Infinite Giving about giving them tools to do that. And that's why I think at some point today, we're going to talk about kind of stock gifting and cryptocurrency and endowments, because the more tools you have to grow that giving, it just becomes a more strategic ask, and it really helps give your development team the tools they need to be successful in a tougher environment.
There's a lot to ask you about there, but I just want to review to make sure I got my notes right. So you're talking about 6 months of operational reserves being kind of a foundational piece, and maybe some of the things that people need to be doing to make that possible, but also just that they should be doing in general, are to reduce expenses to an appropriate level, especially for things where the fees are the expenses. So you don't necessarily mean cutting staff. And in fact, you say later to support your team. And one way of thinking about supporting your team is making sure your team is appropriately compensated. I don't want to put words in your mouth, but I didn't hear you saying you better cut some staff in order to be solvent. Am I right?
Absolutely. And I'm so glad you clarified in that. When we talk about, especially when as an investment advisor, right, and we serve nonprofits specifically. So I'm thinking through that lens constantly. I did an RFP for an organization recently, and looking at their investment fees, where they were with a larger bank who has, layered fees and all in versus what they would be paying, say, with Infinite Giving, right? We were going to save them $1.3 million over 5 years, just in investment fees. And they were like, no, nothing's broken, but like, we're interested in what you're doing. Like, let's revisit. We haven't revisited in a long time. And I was like, great. You should always revisit, whether it's us or anybody else, every 3 to 5 years, look at your investment management. Like, can you reduce fees? I always say, whatever we do in our personal life, think about how we can kind of apply that in some strategic ways to the nonprofit world, right? Like your cable bill. It's like, and the cable bill will go up all the time, your internet, your phone, like all those bills, all of a sudden you're looking at it and you're like, wow, but if I call or I switch providers, like, does that give you an opportunity to negotiate fees? Right. So again, a very simplistic analogy, but it's the same idea of always looking at expenses that you have outgoing that you could reduce, but your staff is not the way to do that unless you're in, that's a severe situation. And in challenging times, you want to give them all the support that they need so they can go out and build those relationships and bring in those donations that are going to make you successful. And also a lot of these financial strategies that people do not prioritize are actually ways to build financial health and sustainability that will get you through these challenges. So I encourage people, as we go through kind of this seminar today, to prioritize looking at these things, to prioritize moving money from a savings account into an investment strategy, reducing your investment fees, growing your reserves, and making sure they're hedged against inflation, because all of these are strategic movements that create money from money, right? You're saving on fees. Well, that's more on your bottom line. If for that other organization, that's over $1 million that their development team doesn't have to go raise. And that's really meaningful. And then they feel like you're supporting them too.
Right.
It's like, hey, look at all these waves that we've adjusted all of our current strategies to help support you. We need you to make up this difference. And here are some ideas and tools we can give you to do that.
Thank you for going along on that, because I know that sometimes when we go into some kind of recessionary cycle, if we're going to define this as a recession, then people become wary about their own positions. They start to hold back. We wonder if we should be spending the same amount on fundraising, because fundraising might seem to some like an expense or overhead versus viewing it in the long term. And then you said something else as you went through that list of several things besides reducing expenses and paying down debt, which makes a lot of sense. And then staying invested. You talked about making data-driven decisions. When you talk about that, are you thinking about decisions based upon the data that's present right in front of us right at this moment? Are you talking about data that maybe informs our future decisions based upon both the present and the past? Because I ask you this thinking that we're going to talk about stock in a minute, and this is always the thing. There are some people who think it's all about the trade and the margin. So there are people out there in the world who are doing day trading, and there were people doing that with crypto, which we'll also talk about in a few minutes, where everything was pretty much about the moment. And then there are people who think kind of the Warren Buffett kind of approach, if you will, which is let's look long term. Let's let the data we know about things and the personal understanding we have of them inform our decisions tomorrow. So when you say being informed by data, how much data is the amount that we need, and how longitudinally broad does it have to be to make good decisions?
Yeah, well, on the investment strategy and the data, I think it often comes down to what are your financial goals, right? What is the suitability for that? If you are a 25-year-old day trader who isn't going to retire for 40 plus years, has surplus income, is very crypto savvy, I would be like, yeah, you can probably go make a lot of money. And I know a lot of young people who have made a lot of significant wealth in cryptocurrency, and we can talk about that later, right? But that's also one of those things that the suitability for a nonprofit is very, very different than what it would be for a young 20-something person who's investing, right? So there's different strategies in place. So one of the things I always like to do when I'm working with a nonprofit is talking about what are their financial goals and what is their risk tolerance. And then we take that and we create a strategy. The difference is because we work only with nonprofits, right? You have to be a tax exempt entity to work with infinite giving. And we have that specialty. There are absolutely patterns, and there is data that can drive those, because nonprofits are more risk averse. It is different when it's not just your money, it is a donor's money. And rightfully so, it's a really big responsibility. And so we always start by understanding that, like, you have a big responsibility, you've worked really hard for that. That donor has high expectations, there's trust, there's relationships with those donations. But when you look at the data for those, you need to look at your long-term strategy. So when I say emotionally driven, okay, well, sometimes we're like, no, I need a person watching this investment every day. And then, oh my gosh, there's going to be something, we need to sell all of our Tesla shares because maybe someone on the board was like really passionate about Tesla. I know, worst idea ever, but just giving you a big scenario. They were like, we sell it, right? So then you look at the data and it shows that decades of academic research has proven over and over again that over 90% of active investment advisors cannot outperform index funds or over a 5, 10, or even 15-year period. Wall Street Journal did a whole study that they have repeated where monkeys were literally throwing darts at stocks and outperforming. And I say that as an investment advisor, right? And so there's one of those things when you're looking at data, humans absolutely provide a very valuable touch. They can tell you about experience, they can help you make strategies, but you can't time the market. if somebody has time to the market, it was luck,
Right.
right? And so generally speaking, when I look at data, I often also talk to boards who are making emotional decisions where they are worried about their reputation, or, well, if the nonprofit is to lose money in the next 6 months when they made that decision, they're terrified to do that. But what that does is it stops and loses potential growth that a nonprofit can be making with a long-term strategy. So I think board members sometimes have to remember that their responsibility is not just for this moment or the next 3 months or the 6 months. Their goal is to create a financial strategy and support for that organization that allows them to build into the next 5 years, 10 years, 20 years.
Right.
And I think when you can take that burden off and step back and look at a lot of these data and trends, right? That's why at Infinite Giving, we do ETFs and index funds, because the data shows that. And so we're also looking at longer term strategies, like what would be a more aggressive approach for a nonprofit is pretty conservative for some individuals, especially if you were younger before retirement. So it's important to know just your suitability and your risk tolerance, but also have that long-term approach and not make financial decisions based off fear.
You said a couple things there that are really interesting from the perspective of working with the board. You
Yeah.
served on boards, and you've also worked on the staff dealing with boards, as well as then being a service provider to them. And it seems like we have one issue in the sector, which is if these were part of our policies and procedures, but also our board training. So people knew that if you're going to join a board, the purpose of the board is to provide this kind of consistent long-term view. And sometimes you'll see that the market goes down and sometimes it goes up a little bit, but you have to hold steady, that you're the captain of the ship, so to speak, or one of the captains, I guess, on the board. That if people knew that coming on before they said, yes, I'll join. And then, so this is not going to be a reflection, as you said, on their suitability for the board, but they're, as a part of their performance, they're following the policy set before their arrival. I wonder if some of this might be helpful. Have you worked with boards in providing training for staff to make sure that is enumerated as people do board recruitment, board training, and help people to be the best versions of board members they can?
Yes, as a registered investment advisor for nonprofits, we absolutely serve as an outsourced CIO and fiduciary for those organizations, and that includes a lot of discussions with boards.
Right.
I will say training, I think, and setting expectations is something that the industry and sector needs to improve in a lot of different ways. And there's not always the tools to do that. And I understand that, right? We have a huge variable in our audience today, and even in nonprofits here in the US, but having an investment policy statement is a great place where I always say to start. Like, number one, you're setting board expectations. If you don't have board terms, you should probably set terms. You always have the ability to renew a term if you would like, but having board terms is really helpful. We talk to nonprofits all the time, and anecdotally, there are more unhealthy boards than boards. I have spoken with somebody, a really great nonprofit that I have a lot of respect for. They had $30 million sitting in money markets and savings accounts. Now, if you don't know this, wonderful for them, right? They worked really hard. That is very significant. When they were planning their financial health, that was a part of that plan. But if you are kind of educating yourself and understand investment strategies, you should know that banks are not for storing long-term money.
Why? Tell us why. It's really
So
important.
again, this is an emotional thing. So emotionally, it feels safe, right? We're going to take that money, we're going to put it over here, and we are protecting it. We will not lose it. Except you're forgetting about inflation. And inflation means that every single year, the money that you put in a savings account is actively losing buying power, and
Right.
you cannot control that. And so right now, 9.1%, right? So your money this year, right now on average, will probably lose about 9% of its value. And then you compound interest, because savings, ideally, right, or those reserves are long-term savings. So that's something that you may not need for 5 years. You may not need it for 10, maybe you need it in 2, but then you go to get that money and it's not valued at what it is. Now, even in a current, you may be saying, well, like inflation, yes, that's crazy, but it's not forever. We sure hope not, right? We thought this would go away a lot sooner than it did. I've now been having inflation conversations with people for 2 years. And they're like, no, it's going to go away. I'm like, actually, it's going up. Even in a really healthy economy, the Fed's target bank rate is 2% for inflation annually.
Right.
A savings account is 0.06% returns, a money market 0.1. So that even right there, you're losing value. So you have risk in the market. You have risk in a savings account. Only one, right? So you have a potential loss of value in both, but only one gives you potential returns. And so that's where you go back to the data and you look at that. And that $30 million sitting in a savings account, I was like, hey, their number one pain point when I talked to them, lovely people, but their number one pain point was we have to raise more money. We have all these big programs, we have all these plans, we have to raise more money. And I was like, great. The best way to do that is to take the money that you're not going to spend in the next 5+ years in your reserves and move it from this place to this place. And when you start looking at compound interest and average annual returns in the market over a long period of time, right? That 8% average annual return, again, on average, over the next 10, 20 years is a significant amount of money. Why did they only have it in a savings account? You want to guess, Jay?
No.
They had a fixed income guy on the board.
Oh.
So they were overly influenced by someone's personal bias. And we all have bias, right? I mean, if you talk to investment advisors, I have an investment committee at Infinite Giving, and they are all incredibly experienced, right? If anybody's been on a board and investment committee, you're going to have 5 people, you're roughly going to get 5 different opinions, right? But that's where you go to that data and this healthy dialogue. And he was so not malintended, but so biased on his personal preference and what he did for a living that that entire nonprofit was actively at a significant loss by that money sitting in a savings account for the last 10 years.
Yeah, I even run into this doing feasibility studies for capital campaigns where you talk to 2 people who seem to be of roughly equal affluence and age, and one person loves the idea of endowment. They're all about putting money into something that's going to, continue to serve in perpetuity. And then the other person says, I hate the idea of an endowment because they don't. So they're really reflecting their some combination of experience and values more than they are demographics and how much they've got in their own, portfolio.
Right. And that's where, like, if you're an organization, you're saying, yes, I'm living this and this is what I'm going through, like, what's the solution? I think there's solutions, like you said, Jay, in training that board up front, clearly setting expectations. If you are wanting to invest or you already are investing, you should have an investment policy statement. That's what's called an IPS. And that IPS is not a legally binding document, but it essentially sets the stage for what is your board's responsibilities, how can your organization invest, and usually it gives parameters, right? But it gives them their role, and their role is not to invest that money for you. Please do not do that. We can talk about that in a second, but the investment policy statement is what provides those guardrails, and then that way the board knows, hey, here's, as an organization, the parameters on what we can and can't do in investment. And our job is to make sure that we choose a third-party vendor that can meet our fiduciary responsibilities, that can follow the IPS, and that can inform us and make sure that they have a nonprofit expertise that can help guide the organization. If you need an investment policy statement, we have a free one on our website, infinitegiving.com. If you go into resources, I always tell people, don't go create the wheel. You don't have to go pay thousands of dollars for somebody to do that. We have it as a template where you can add, and it should give you a great place to start.
We'll make sure to include that in the comments. Thank you.
Yeah.
One thing before we go any further is that I do see a couple of people have raised their hands. I'm not ignoring you out there. As some of you may have not heard this early on, for some reason the chat is Yes, I see Mandy is raising her hand. We're not ignoring you. We just can't let you, first of all, because it's a webinar, we can't show you and listen to you, but also we don't have the ability to see you in chat. And I apologize for that. We're trying to figure that out, but I don't have the ability to turn it on, and I certainly didn't turn you off. However, we do have the Q&A. So if you have questions or even comments, feel free to use that. And we had one earlier from Brent, and I just want to acknowledge that, and we'll try to weave that into the conversation because it addresses this issue about demographics and also people's experience and how it influences their beliefs about giving, and what's an appropriate way to give, and whether or not they think it's possible, and also what's appealing. But before we go there, you went into a segue, Karen, about proper ways to invest. So maybe that's something that you could talk about kind of briefly, and then we can jump into some of these things that I know are really hot for people to talk about, when ranging from stock and a down market, frankly, because that's where we're definitely seeing bears by many measures, and certainly talking about crypto, because most of us are reading about the crypto crash. Maybe it's not true universally. So there's some of those things we can talk about, but just can you give us kind of the like a 2-minute quick introduction to how nonprofits should invest?
Absolutely. On a really high level, the basics of nonprofit investing is not all nonprofits should invest. And I always like to start there, right? So if you are an earlier stage nonprofit, or if you're still seeking that, getting out of that scarcity mindset. So if you are month to month, you should not invest. If you're still in a scarcity mindset, do not invest. That investment strategy comes into place once you have built your healthy operational reserves. So when we talk about kind of the tenets of financial sustainability, the first one that I always encourage folks to do is to have those operational reserves. So 6 to 12 months of operational reserves. Once you have that, then investment should absolutely be on the table for you. And again, we touched on it earlier, but a savings account, 0.06% average annual returns, money markets, 0.1. If you're lucky, a lot of them are less, even though they're even a little up right now. Right. CDs, maybe 0.2 right now. They're going up a little bit. But anything that you're in with CDs, money markets or savings account, you're actively losing value. So when you've built up your healthy reserves, that's when you start to say, all right, this is something that we've now reached this, financial sustainability tenet right here and this cornerstone. And then we have to choose to hedge against inflation. And that's where we say, great, now is the time to open a brokerage account. And then you should invest that. And you can do it in a conservative way. And you can do it in a way where it's highly diversified. We recommend ETFs and index funds, highly diversified, but maybe it's an 80-20 or a 20-80 or a 30-70 allocation, right, of stocks and bonds. But even that, getting in there gets you into the market, and on average annual returns over a mid to long-term horizon, you're going to be able to get 3 to 5% average annual returns for the most part. So when we talk about hedging against inflation, that's where you want to start. When you get out of the scarcity mindset and build your reserves, that's when you're ready to start investing.
Okay, so that's the starting point. You described some of those kind of portfolio balances. I just want to make sure I understood, though, two things. First is that your investment can start after you've got a good reserve. So where are you keeping that reserve in the meantime, since it's losing against inflation, unless you put it into something like, I'm going to say something dangerous here. So I am not the advisor. I'm in no position to do it. So this is just a question. Something like I bonds, which are, working against, as an inflation hedge. So how are you keeping the reserve to make sure it doesn't get degraded as you're building it? And then, how do you do the second?
No, that's a great question. And it's a good clarification. So when we are looking at that, I always tell an organization, right, we're going to go really high level, but I'm going to say, generally speaking, you have your 12 months of your operational expenses. You don't invest those. So you're like, all right, I need my 12 months. Do we have that coming in? Sometimes it's rolling. Sometimes it's there. You've pre-raised it. However, your kind of financial balance sheet and all of that looks. So you have your 12 months of operational expenses. I usually encourage folks to take 30, maybe 60 days of those operational reserves beyond that 12-month of expenses and put those in. You could put it in what Jay suggested. You could put it in a high yield savings or a money market. And that way you have this like immediate little side where you can pull it out really easily. You can put in there. Anything beyond that, as you're building those reserves, you should already go ahead and invest that. So to your point, it's like you want to be able to look at, can you have something, if something immediate or emergency or a new program that pops up that you just have to have this extra funding for? Yes, it's accessible. It's there. You have the data, you've planned it, you've made your spreadsheets, you know what the intention is. Beyond that, you should open up a brokerage account. And then that's where you want to find somebody who's really accessible. Like Infinite Giving, our minimum investment is only $25,000 because we're like, hey, we want it to be accessible for smaller organizations. We also serve upwards organizations, right? Probably under 100 million would be our sweet spot. So you have this wide variable, but you should still be able to get into a brokerage account and start investing to hedge against inflation.
There's a lot I can imagine that people would be concerned about as they're starting this journey. And one of those things would have to do with the ethics of certain things. So I know that ethics is really boring. I don't want to see everybody leave the room as we discuss this, because I do think this is important. And one part is about the investments that organizations make. But before we even go there, there's the part about who's serving on the board and making these decisions. So one thing that I know is an issue for growing organizations, small organizations that are growing, is often they'll have a working board or something that resembles that, and they'll try to gain expertise they don't feel that they have or they aren't confident about, and that might mean they have a banker on the board and an attorney on the board and so forth. But is there any kind of guideline that you would provide that as far as whether or not these individuals should be doing business with you?
Yes, there are lots of folks who do this. And so I steady yourself, right? But I'm going to tell you that it is not a good idea to have someone on your board managing those funds for you. It is a conflict of interest. It is not illegal. You have to, the SEC says that you can do that as long as the conflict of interest is fully disclosed to all parties. But it is not a sound ethical decision. And it doesn't mean they're bad people, right? It makes total sense. I understand why you're doing that. But there are a lot of potential negative outcomes that come with that. And I talk to people all day long who have that. So I would take a couple of examples for you. If you were to have 2 investment advisors on your board, how do you tell which one are you going to let manage your money? If it is your Uncle Bob's friend's brother and you feel like you have to use them because of that relationship, what are you going to do if they underperform? The other day, I talked to a nonprofit and someone on their board had been managing their funds and they had just trusted that. And it was a really good person, et cetera, et cetera. They recently had somebody new come on board and was like, hey, are y'all checking your benchmarks? They had missed every benchmark over the last 5 years, and they didn't know how to have that conversation because it was a board member. I also recently then talked to another nonprofit, and their board chair was managing the money because he had an RIA. So he's a registered investment buyer with his own firm. And I was like, all right, well, if you're avoiding any fees and you fully disclose this, here's some concerns about that, but best wishes. And they were like, what do you mean no fees? That board chair was charging 1.5% to manage those funds. So when we talk about conflict of interest, he was just like, oh, I already have this business and I'm going to do that. But there's a lot of layers to that when you're a nonprofit and you're doing donor money. So I always say, let's look at what the most successful endowments and larger level organizations do. And what they do is they have those experts on those boards. And what their purpose is to not actually do the work, but to advise on how others are doing the work and to say, okay, hey, let's find 3 different opportunities to invest. And I'm going to walk everyone through why we should choose this one or pros and cons for each of these. Let me help you do a fee evaluation so we can fully understand how we're paying these fees. Oh, in our investment policy statement, we have these allocations, and I've noticed that the investment advisor maybe needs to do a rebalancing sooner rather than later because it's starting to, bleed outside of our approved allocations. That is their job. Their job is not to manage the money for you, and the conflict of interest and the negative outcomes are massive. So.
Thank you. And again, this might seem obvious to some and not at all to others, and it may be irrespective of the organization's size. I just want to make sure we touched on it. There's another subject on the ethical front, which may be important as people grow, whatever they've got and whomever is managing it. So let's just assume that issue is handled. But then an organization has to decide for itself, do I want to invest in this or that? Does that reflect our values? And I don't know if that's something you run into a lot, but for example, one organization I worked with in the past on a consulting relationship had a very specific set, it was a UN related organization. They had a very specific set of organizations that they could not do business with. It was health related, so they wouldn't work with tobacco companies or alcohol companies because it was not aligned with their mission. And there are different organizations that might feel the same way, but some have that policy and some do not. As you work with organizations to develop, for example, the investment policy statement, or to even think about these things more broadly about what kinds of support do we wish, not just what form does it take, like the crypto we'll talk about next, I guess, but also just generally speaking, the kinds of places where it comes from. What are your thoughts on that? How do you help people figure that out?
Yeah, so that's ESG investing. So you're looking at like environmental and societal impacts. I know a lot of religious organizations feel strongly about kind of where that money goes. Most organizations are probably just now entering into those conversations. So we certainly go over that with them, and that should be what your investment advisor does. That's also something that the folks on your investment committee can do, is talk about, all right, as an organization, what are we comfortable with? Do we have feelings about this? Does it matter? Often I will get people who are like, yes, we want to do ESG investing. And we offer 5 different portfolios at Infinite Giving for ESG investing. One of the things that's important to know is there, again, when you go to data, there is a lot of data that shows that they can perform equally or at least as good at, if not a little bit better than other index funds and traditional investing. At the same time, there are significant amount of additional disclosures required for ESG, and they are often considered more risky simply because they are newer and there is less data and sometimes less liquidity in some of these. So often there's really good intentions, and then once you get into a kind of risk tolerance, sometimes those organizations are like, oh, I didn't know that, and they have to go back and have those conversations. So it's not always quite as clear cut, but any good RIA should be able to have access to ESG investing. We have portfolios that are fine-tuned for that. And there's certainly some really strong potential outcomes for those, but there's also some additional disclosures that those are required.
And then once an organization goes down that path of saying, this is who we are, this is what's appropriate for us to receive, the kinds of donors we want to receive money from, then they can communicate that probably more clearly and openly to their potential advantage with other donors who are also so aligned. If in the absence of that, it's just sort of, making a statement, but a statement isn't the same as having a very distinct policy in place, right?
I mean, any good nonprofit person knows that storytelling is how you get the work done, right? It's how you fundraise in that. And so there's very few people, I believe, that would be against ESG investing in that storytelling aspect. So certainly, depending on what your mission is and what your work is, it could be a very appropriate outcome and a great way to storytell and invite donors into that story with you.
Now, I know we should jump into some of these more specific things, and we've talked about very important stuff for the bulk of the hour. But one of the things that I know we were advertising was talking about stock giving and crypto giving.
Yes.
So which one you want to take on first? Because both are in this kind of, emotionally charged environment, to borrow from what you said before. It's a pretty tough time.
Yeah, I think stock gifting is usually a bit more straightforward, but not enough organizations are set up to be able to accept stock gifting. Now,
No.
if you already think you are set up for stock gifting and you have your D2C, great. But I think stick with us because I may have some really good points for you as well. The majority of high wealth donors, where do they hold their money? It's in the market, right? And why do they hold it in the market? Because that's where wealth is created over long periods of time, right? So this is all just building into, why should a nonprofit do it? Why do we have 401ks? Why do we have 403bs? Why do we not save for retirement in a savings? So high wealth donors have a lot of wealth for multiple reasons, usually, right? And they hold the majority of their wealth in stocks. So giving stocks directly to an organization helps the donor avoid long-term capital gains taxes, which ultimately is roughly around 37%. So say they were going to give you $100, right? Normally they would say, great, I would give you $100, but minus $37 because that has to go to taxes, and nonprofit, I'm going to give you what's left. So when you're only asking for cash, which when you go to people's donate buttons pages, oh, so many of them are good. And we're creating a whole thing. So if you're a client with Infinite Giving, we have a whole gifting page that we're helping make that donate button page prettier. But all that to say is, so often we only ask for cash. And I know the Russell Institute did a study that said, hey, if you ask for assets in addition to cash, you can actually grow your giving upwards of 55%. So right there, you're like, oh my gosh, this is completely, over 90% of nonprofits don't even have a brokerage account already set up to where they could accept stock. So you need to know that it helps donors because they can avoid long-term capital gains. We're clearly at a loss right now. That doesn't mean you should not ask for stocks, because guess what? They can also save taxes on losses in the market.
Oh, no one ever talks about this. This is something I've talked about for 20 years and no one ever. This is real, maybe because the market kept going up, but this is so important.
Yeah. So it's like, oh no, but all the stocks are down. I'm like, great. If they sell it, they can get a loss, right? And then they're still getting a tax exemption for their donation to you. So for tax efficiency for donors, it is the best way for high wealth donors to give. Stock gifts are usually significantly higher than cash gifts. They actually should be pretty easy for a nonprofit to do. A big piece of that is sometimes nonprofits are like, yeah, well, I opened up a brokerage account, but we don't get that many stock gifts. I'm like, okay. When I go to your donate page on your website, you don't mention stock gifting. Right. Have you been talking to donors and letting them know that they can gift this? Have you been educating your donors about the opportunities that they have with stock gifts? Because again, it usually equals a bigger gift for you, both in the average actual size and because they're giving it to you before the tax deductions. They have the tax savings, so you get a larger gift. But you're not set up for that. So I often say you need to educate them. You should be able to receive them. And it's quite a meaningful way to grow your giving. So that should be something that every nonprofit should have, and they should make it easy. When I say making the experience easy, one of the things that people will say is like, oh yeah, it's a D2C. Like, great. So the D2C essentially tells you how to wire, right? Often when nonprofits do have that experience up, it's like, great. The donor has to go write it down and figure out on the website where the stock gifting is, or you have to get a phone call and you have to go back and forth with the broker. And then the nonprofit has to be like, yes, liquidate it, don't liquidate it. What's the timing? It's a whole manual process. So shameless plug, but it is one of those things that Infinite Giving has solved that. We actually do a white labeled URL to the nonprofit that you can link into a button, and it allows them to easily gift stock gifts to your organization. We liquidate it immediately, reinvest it into diversified portfolio, and it also brings complete transparency too. So often there's like, hey, we got this tranche of money, and even like higher ed who has like entire departments dedicated to this, or like emails will go around and be like, hey, Is anyone expecting this 25K gift? Like nobody knows where it came from.
Oh, yeah.
And
That's,
it's
yeah,
just a
that's
broken
it.
system because it's a very manual, traditional banking and investment system. So for us, technology has solved that to where you immediately also get an email that says, hey, Jay Frost is going to give you 100 Apple shares. Heads up, Jay gets the email that has the D2C, an email form that he clicks forward to his broker. And then you get that full visibility. So I know Jay's email, I know what Jay's giving, and I know to expect it. So it's really easy to do a thank you. So just because you have a brokerage account, that's not always enough. You need the brokerage account. You need to educate your donors on all the tax efficient ways for both losses and gains that they can avoid paying. And then you need to make the experience really easy and enjoyable for them. And it works.
Yeah, yeah. Thank you for that. And again, this is not for everybody sitting in here. I know you're just sharing some of the things you're doing to address this problem. So whether or not you choose to use infinite giving for this, that's another matter. But if you haven't gone through this process of trying to receive stock gifts, first of all, for all these reasons, it's so important and especially beneficial to the donors. But also, it is such a pain when you get a stock gift and you have no idea where it's from. It's really pretty embarrassing. And we all know that stewardship is key to retaining donors. So finding whatever system you can, whether it's with a third party or just doing your work more comprehensively and effectively, so you know when donations come in, where they came from. It's really a godsend for you and for the people who love the work that you do. Now, crypto is a totally different thing, right? So the stock market's like this, but overall, this has been the stock market over 100 years, which I know people don't like to think about, but the reality is donors who give a lot in stock, they've been around the block a couple times. Crypto is a different environment.
Right. The stock market is absolutely this.
Right.
There's ups and downs, but that line is there. And that's where people, I'm like, they always get fearful. I'm like, no. But
right.
Yeah, crypto, whole different ballgame. Much more.
Just in case there's someone here who has tried to ignore Twitter, which would have been a great thing, in the last couple of years, and they don't know anything about crypto, could you just say, what is crypto? And then can we receive it or not? And what's the best method for doing it if we want to do it?
Sure. In a very simplified way, cryptocurrency is a form of money that you cannot physically hold, which if you think about how you're doing online bill pay,
sure.
Like when most people these days carry cash a lot less. So it's like, all right, you're trusting this banking system, you're trusting the value that you've assigned to that. So you could even think of it like a foreign currency where there is certain buying power that depending on the day, people, apply value to because of demand. But there's a lot of ways that cryptocurrency is solving security issues and democratization and access of the banking system. So it's money. If you think about it like that, it is money. There is buying power. You can buy stuff with cryptocurrency. It is not going anywhere. So the most popular cryptocurrency is Bitcoin or Ethereum. And there is a lot of cryptocurrency holders. So right now, 21 million Americans own cryptocurrency. So it's more than you think. And the group as a whole, there's been several studies done on it. Actually, Fidelity did a great study on it. And cryptocurrency holders are actually more philanthropic than the average investor. So just think about that. And then you think about too, well, what is this section of people? They're usually younger. They're very philanthropic. They're very tech savvy. If they want to help, but you are not able to receive that, it kind of becomes, you're in this place where you're like, well, yeah, I want to receive crypto. I'm hearing about it a lot. There is a lot of wealth being given in cryptocurrency. On the other hand, I always like to tell people it's not a silver bullet. So I think that it is still absolutely an outlier in general, right? So there is absolutely extreme wealth being made. 20 million Americans, a lot of those have made a lot of wealth in cryptocurrency. They want to give. But at the same time, you have to think about access in that. So every nonprofit, I believe, should be able to receive cryptocurrency. They should have a way to do that. They should be educated on that. But I also like to tell people don't plan on it just magically bringing in $10 million like this year, right? So it's not this silver bullet. Sometimes I've talked to a nonprofit the other day, and they were like early scarcity mindset days. And they were like, all right, I need to hire somebody and pay this annual subscription fee so that we can be ready to receive crypto. And I was like, don't do that. Educate yourself, kind of know a way, find a free way, find a more affordable way, or do something. But that way, when someone's ready to give it, you have the ability to receive it. Another interesting little note for cryptocurrency is that the IRS treats crypto similar to property and other assets. So donors are not required to pay capital gains taxes on crypto giving, and they can receive immediate tax deductions on those donations. So there's also losses, just like with stocks. So on the crypto market is significantly down as well. I know a lot of folks who are selling and filing those for losses, and then later down the road, they can buy it again at a lower rate. So we could get, I'm trying to make it big picture, but all I say is there is money to be had. It's a very philanthropically driven community. All nonprofits should be able to receive it. And I think it has become much more common. If you're like, Karen, where is crypto giving in the next 5 to 10 years? I'm going to say it's going to be very, very mainstream. I know Heifer International, I believe, just the big article that came out that they have increased and done a new focus on crypto. They're doing it for a reason. And it's very strategic and it's very smart. And it's a way that the more they talk about it and educate donors, now all of a sudden crypto donors are like, oh, but we know Heifer International can accept crypto, so we can give to them. So there's a lot of different ways to think about it, but full circle is it's what story are you telling? How strategic do you want to be in financially planning sustainability for your organization? Are you doing these reserves? And crypto and stocks and even endowments, which I know we didn't have a lot of time for, but these are all tools that you can give your development team that are additional ways for people to give to you. And I know sometimes I talk to people and they're like, well, yeah, we would love to do an endowment, but I'm afraid that if someone gives to the endowment, they won't give over here. And again, data, not emotion. Actually, there's a lot of data that has shown that on average, the different ways you can give, and it's not about harassing people and all of that, so you have to be really strategic, but the different ways you allow people to give generally increases giving by upwards of 20%. So it's not, I will give you here or here. It's like, hey, we're going to make a really strategic ask, and you usually give, X amount of money. Would you give an extra 10% this year to help us seed an endowment so we can be a financially sustainable organization?
Right.
Or like a micro endowment, right? I always tell people it doesn't have to be $1 billion endowment to be meaningful. Maybe this endowment is starting to speak about sustainability, and you're moving into 10-year, 20-year goals instead of that scarcity mindset. Maybe you can endow a program or a salary, or it doesn't have to be the entire organization. You can still have a meaningful way to give. And of course, that helps with planned giving conversations when a family is able to have a legacy endowment.
Yeah, I was just thinking as you said all this, that if any of us now went to a store and they said you can only purchase with cash, which does happen in some places, but it would be difficult for those of us who want to use a card or want to use Apple Pay, for example, for those who use something on their phone. So that's one kind of analogy to all this. And another one is, imagine you went to a store and all they wanted to do was sell you one kind of product. There are stores like that, to be sure, and there are different ways to maybe pay for that product, but you're limiting your audience either on the one hand by what you're offering to them, the opportunity to have the impact in only one way, or in the other example, you might be giving them in various ways to have impact, but only giving them one way that they can contribute to that impact. So what you've described is just something that we all experience every day. All we want to do is make that possible for donors in the same way we do as consumers, which makes a lot of sense. Now, I'm just going to say this just because it's fun, but NFTs.
Yes.
So I know we don't have time to talk about NFTs, but I'm just going to mention it because people will inevitably ask about them.
Absolutely.
So any thoughts on that?
Absolutely. We've had a few questions even in the last like 2 or 3 months from clients or potential clients asking about receiving NFTs. There's a lot of money that's being made in NFTs as well. It's a whole different kind of concept. It's a little bit different. It's also on the blockchain. There's lots of different things in that. Long story short is if someone says, hey, we'd love to do an NFT auction to benefit your charity, you say yes. And you can email me and I will try to find somebody to help you. That's not something we do, but we have a lot of connections in that. And we've been doing a little bit of like side consulting on that because it is a very new thing. So if you're like, I'm going to find a company that will help us do this, I don't believe they exist yet, but there are a lot of folks in there in that kind of community that are, again, very philanthropic, and there's a lot of money to be had, and they can do auctions that benefit you, and then ultimately they can give it to you and send it to you and convert it into cash. So most people who will help you receive cryptocurrency donations will liquidate it into cash and give you that cash. So you don't have to worry about holding, especially if anyone's your fiduciary, they're not going to let you hold crypto anyway.
Thank you. Yes.
And the biggest thing with NFT and what I recently told somebody else is I'm like, just look at the artwork and make sure that it meets whatever threshold you have that fits your mission. And if you approve of the artwork, then absolutely you should do that.
Yeah, that makes perfect sense. And once again, it's an asset. How you happen to feel about the asset, some of us love Van Gogh and some of us don't. And so the question is, do you want to be in the business of receiving a work of art and then selling it? And you just answered somebody else's question. I think it was Peter's from earlier about if you receive really any of these things, do you want to sell them right away? So stock, NFTs, crypto, is that the plan? Is like same day kind of thing?
Yeah, so anything, generally speaking, right?
Unless it's an auction, I guess.
Generally speaking, you would want to liquidate it. So like if someone were to give you all Tesla shares, again, then I would go back to what is your risk tolerance? What does your investment policy statement say? Holding Tesla shares would be very risky because it is a single stock. So most nonprofits would say, no matter what stock it is, they would say, hey, you should actually be in a highly diversified portfolio, and holding a single stock does not diversify that, which means it increases your risk. Cryptocurrency, you could hold Bitcoin in 5 years. It could be worth 10x what it is, 50x what it is, or it could be worth nothing. So anyone serving as a fiduciary and nonprofits generally being risk averse, we always say you should liquidate immediately and either reinvest it into a diversified portfolio or just put it into cash and then put it into your expenses. Just don't put it in a savings account, money market, or CD if it is a long-term financial plan.
And by the way, we had a question from Trisha. I hope we're addressing the other ones one way or another, directly or indirectly. But Trisha had just said, what is an NFT? We're talking about non-fungible tokens, although I think you probably deduced that from Karen's description. And if you look this up afterwards, just for fun, once again, you'll see a lot of interesting images, which is what we're talking about here, which is why, once again, the ethics of this have to do also with, is it aligned with your mission? I'm not suggesting there's bad images out there, although I guess we would all agree that there are, but rather just that you want to do things that make sense for your current and future donors and the people you serve, and so that's one of the considerations.
It's essentially digital art. If you think about it as digital art that you can always see the original. So, just like regular art can be reproduced and you can have prints, but you still know the original, and it's the same digital version of that. You either greatly value that and think it's cool, or you think it's silly, but there is, I literally, someone on my engineering team bought one and sold one for like 60K the other day. And I was like, that was a very productive day for you, sir.
Yeah.
You learn more about NFTs. But there's money to be had, but it's the story we're telling and the tools you're having. So to go full circle, it's like, think creatively and strategically and data driven when you're thinking about finances for a nonprofit. Take out egos, take about personal preferences and biases, but set those expectations, and then don't be scared to pursue long-term strategic goals in creative ways that can really help you be sustainable and kind of reach that next growth trajectory for your nonprofit.
And I know we could have talked about other issues here, the ethics of receiving some of these things, given, again, their sourcing and whether or not we know what it is with blockchain. There's also the discussion we could have had about something that's a lot older, and I know I'm sure you have tremendous experience with, that's real estate gifts. And then there's also international donations, which might come through any of these sources. But I guess we'll probably have to save all that for another day. But all of this has been so instructive. Thank you so much, Karen, for all this wisdom and experience that you're giving to us here and sharing with us. And once again, if people want to know more about your work, but also just want to learn more about all these things we're talking about, what are the 2 or 3 things you suggest, both to get in touch with you, but also just to learn more about this subject?
Sure. Infinitegiving.com is our email. If you want to learn more about crypto and philanthropy, we actually have a free white paper on our website. If you go under resources, on that tab, you'll actually see a free investment policy statement, as well as a free white paper on crypto and philanthropy. But yeah, we'd love to help. And I know I talked about a few different opportunities that we have to serve nonprofits. I get really passionate about the work that we're doing. So if there's any way that we can help, definitely let us know.
I also want to encourage people who are here with us to join us for future sessions. We have 2 coming up next week. If you're here with us in real time, or if you're watching this recording, it'll be the week of, what is that? What is next week? August 1st? Is that the week of August 1st? Which are, let me see, one session, which is on Tuesday, August 2nd, 2022, in case you're in the future, with Dr. Kenna Barrett, who's the Chief Development Officer at the University of Maryland Libraries, returning to discuss persuasive conversations for introverts. There are, believe it or not, introverts in the field of fundraising. She knows all about that. She's studied it as well as practiced what that is, and she'll be giving us her insights on that. That's again Tuesday, August 2nd at 3:30 p.m. Eastern time. And then on Wednesday, we have a special all-star panel on Giving USA's new Donor Advised Funds report. Another thing we could have talked about today, and I'm sure that Infinite Giving has a lot of resources on, but donor advised funds are something that have been of great importance to us in the sector. And we have people from Vanguard Charitable, the Arizona Community Foundation, Greater Flint Community Foundation, and the Giving Institute, all talking about that. That's Wednesday, August 3rd at 1 p.m. Eastern time. We hope you'll join us for that. But thank you so much for being here today and putting up with our chat problem. We are so grateful to you, Karen, for returning and sharing this with us today. Do share this recording with your colleagues out there who need to hear many of the things that Karen has shared with us. This recording of this will be placed on YouTube and on the DonorSearch site at DonorSearch.net, a place where you can learn a lot about the donors who frankly have all of these assets we've been talking about. Learn more about that at DonorSearch.net. So until next time, thanks so much for being here. Stay healthy. We'll see you soon.